Sue Trinh, Senior Currency Strategist at the Royal Bank of Canada, is with us this morning. Sue, how are you?
I'm very good, thanks, Susan.
So what about the Chinese economy? Flash PMI contracting for a sixth straight month, but still better than the numbers we saw for March.
Well, I think that's the important thing, is that we are actually seeing a bit of an improvement there on the month, and it's had somewhat of a short-term impact on the markets only. The markets shrugged off the relative improvement in the PMI. I think really the key focus is on the heavy event risk that we have this week. There's no shortage of that, with FOMC foremost in that regard, middle of our week there.
Yeah, and talk to me about what's happening with the Aussie dollar. I'm just curious with this weakness this morning by a third of 1%. What's being priced in right now?
We had weaker than expected Q1 PPI numbers, which the markets extrapolated into a weaker CPI number out tomorrow. And bear in mind that the CPI report is, on that report rests the probability of whether the Reserve Bank of Australia cuts rates in May or not. And in that regard, the market is pretty much fully pricing in a rate cut already for May. And I think the bigger issue is that further out the curve in the next 12 months, the market's got way too much in the way of rate cuts priced in, with 95 to 100 basis points of cuts. And that compares to RBC's forecast of only 50 basis points of cuts. So we think that this weakness in Aussie should be somewhat short-lived.
Oh, short-lived. Even though we're expecting 2 rate cuts to come?
It's relative to what's priced in, and as I mentioned, with the interest rate market pricing in 100 basis points of cuts or thereabouts, there's still too much. So a repricing of those risks, or a normalisation in rate expectations towards the RBC view, would suggest that there's limited downside for Aussie.
So how much do you think the Aussie dollar, well, what levels do you think the Aussie dollar would trade at this year? Then, are you saying we're going to get stronger from these levels right now?
I think that the risk-reward does suggest upside for Aussie from these levels. If you do get the relative rate adjustment in terms of expectations on the Aussie side, add to that what's priced into the US curve, which is a much sooner than expected conventional rate hike by the Federal Reserve as early as November of 2013. Remember that the Federal Reserve's guidance is late 2014 still, which should be reiterated at the FOMC statement this week. That the balance of the relative rate risks do suggest Aussie dollar could go higher. We wouldn't rule out a retest of new highs above 110 even.
Really? 110? Maybe it's time to get in if you believe that the consensus, but that's a bold call. As I say, you're expecting the FOMC to raise interest rates in 2013, is that right?
No. If the FOMC sticks to its guns and maintains its language of a late 2014 guidance that, given the Fed funds futures are pricing in a rate hike as early as November 2013, the risk to interest rate expectations in the US is towards downwards revision.
I couldn't hear you properly. Probably the Australian accent or something.
Okay, Kiwi accent.
Now, talk to me about the yen. What's going on with the yen as well? Because we are seeing some interesting moves in the Japanese currency as well.
A lot of event risk for Japan this week. We've got Japanese CPI for March out on Friday, as well as the Bank of Japan's interest rate decision as well. There's a lot of speculation of further easing by the Bank of Japan, increasing the asset purchase target limit by about 5 trillion yen, which on the face of it would suggest bias towards yen weakness, at least into that event risk. We think it's going to be more of a buy the rumor, sell the fact event, because we don't think, well, at least we're not convinced that further easing by the Bank of Japan is going to have a sustainable bearish impact on the Japanese yen.
So what's happening there with the euro, especially in light of this new IMF, I guess $430 billion in extra funds and $1.5 trillion total firepower now?
Well, we think that given the hurdles and the obstacles to get to this point, that the fact that they've managed to come to some sort of agreement should be at the margin positive for markets. The $430 billion US that they've agreed upon should be considered a floor. Looks like the IMF are looking to get greater participation from especially the emerging markets nations, likely around the June summit or so. So at the margin positive for currencies and the euro, but at the moment it looks like political risk is at the forefront of the investor psyche. More the collapse of the talks in Holland, actually.
When did that become a problem?
So it's just weighing a little bit on sentiment at the moment, and there are emergency talks later on today when Europe comes in. So that seems to be weighing upon the euro sector.
Yeah, what's your RBC view on what's going to happen in Europe? Because now you not only have Spain to worry about and Italy, but then all of a sudden the Netherlands, you have to throw in political risk and the elections taking place in France as well.
Yeah, I mean, I think that the main thing is that, especially with the spread widening that we're seeing in the European bond markets, that there are a lot of comparisons being drawn to late 2011 when the euro area-wide stress levels really escalated. But there are a lot of differences between now and late 2011, the most important one being that there are now mechanisms in place, particularly the wider powers of the EFSF and the ESM, namely the precautionary programs, to more actively intervene in the primary markets should the need arise. And I think that helps to reduce a lot of the tail risk there.
But you're still expecting weakness in the euro, right? We're looking at levels you're calling 127 or so?
We're looking for a 127 by the end of this year. It's not going to collapse for the reasons that I mentioned. So, the risk of imminent bank failure now has been much reduced due to the LTRO facility. Sovereign funding is not guaranteed, but as I mentioned, there are mechanisms in place to at least act as a stopgap measure against that. So
okay.
euro at 127 is our base case at this stage.